Hi, Andy Nolte here with Fairway Independent Mortgage Corp with Ellen Zetmeir discussing refinancing. Going to go over maybe a myth or two and when it makes sense to refinance, when it doesn't. Um, a lot of times I will get phone calls or emails and someone will be inquiring about a refinance and they'll think it's too early. They just were in the house, bought it a year or two ago, and they claim it's too early to refinance, right? It doesn't make sense. And that's actually wrong. The earlier, the better. So the earlier that you would see cost savings, right, makes sense. The more savings you'll see over the life. That's one reason why. And two, as I have on my screen, an amortization calculator. This is a scenario with a $225,000 loan amount at 3.875. Regardless what your loan amount is or what your interest rate is, you pay, especially early on, the majority of your payment goes to mortgage interest. So here you see on the screen payment 1, 2, 3, 4, 5. A little bit goes towards the principal, and the majority of the payment, the vast majority, goes to mortgage interest. And each payment thereafter, a little bit more goes to principal, a little less to interest. But it takes quite a few months to have some kind of impact. So you get down here to month 60, which is year 5, and you're still paying the vast majority to mortgage interest. Say you're down to year 10, you have spent 10 years paying on your mortgage, and you're finally getting to a point where about half of it is going towards the principal. That might not be a great idea to refinance and to, go back to a 30-year and start all over. So keep that in mind when we're refinancing. Earlier the better. Two, I'm going to show a little example here on a situation, a scenario where someone purchased a home 2 years ago. So very recent. So they bought it for $250,000. They put 10% down with a loan amount of $225,000. They have a really, really good interest rate of 3.25%. But they have mortgage insurance. That mortgage insurance is $93.75 a month. So we all know that property values have increased, which is a great thing. That's why we buy houses. We buy houses for an investment. Yes, it's bad for taxes. Taxes are going up, but the whole point is it's an asset, it's appreciating, and you will reap the rewards and benefits from it. So the market's been crazy. We can safely assume, at least I would, that values have gone up to $275. So we've paid the principal down to $220. I can get a 3% rate. It's only a quarter better, but the key here is we removed mortgage insurance, and that gives us monthly savings of $145, and that would be absolutely worth refinancing. Another scenario here is an option is to shorten your term, and this can be huge long-term savings. So same kind of scenario, bought it for $250. In this one, we've paid it down to $212,000 over 3 years. Currently at a 3.875 rate, we can go to a 30-year at 2.875. It gives us some really nice savings, also removing mortgage insurance. But look at this 15-year. We can reduce your term in half, get a rate of 2 1/8, and the payment's only $227 more. I say only, not everyone can do it, and I can understand that. But look at the long-term savings. Long-term savings is $70,000 in 15 years. If you would have paid that 3.875 over 30 years, you would end up saving $110,000 by switching to a 15-year. But just over 15-year to 15-year, save $70,000. That's 2 or 3 colleges for your kids. So these are things that we go over when someone comes to me for a refinance. We'll go over, is it right? Does it make sense? We'll go over different terms. Maybe it's a 20-year term. But probably, 1 out of 5 people who come to me for a refinance, I tell them not to do it. And, these are some reasons why. Limited monthly savings. We're not seeing the savings, don't refinance. If you don't plan to be in the house for longer than 2 or 3 years, don't refinance. The costs associated for a refinance just simply doesn't make sense. If you've been paying on your mortgage for 10 plus years, and yes, you're seeing the monthly savings, but does it make sense? We'll do those calculations and see where is the catch-up point. Moving from a fixed rate to an ARM, probably not a good idea. Maybe in some situations, very limited. Or for people that are expecting income loss or lowering of income. So I've had people that have refinanced into a 15-year from a 30 that come back to me a year or two later because their income has changed and they're going to refinance back into a 30 because that payment's less. But I hope this makes sense. I hope this is helpful. I certainly encourage you, if you are interested in looking to refinance, the best thing to do is send me a recent mortgage statement. I can take numbers right off that mortgage statement and come back to you with a bunch of different options, different terms, different rates. We can look at an amortization schedule, and really important that you get educated. So I appreciate your time and look forward to hearing from you.